What's up, guys? It's Ray J back with another video. And in this one, I wanted to break down what's happening with SPY, Tesla, and the overall markets. And I'll break down other factors out there that are very important. Why the market saw a nice pump on Friday, followed by a massive rug pull after Donald Trump had made some very, very important announcements. But just know that I'm not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed 30 in total. And the offer ends very soon at the end of March. So, what's going on? Why was Tesla trying to bounce, and why did it get this rug pull? When you look at the 5 minutes time frame, okay, you guys can see that Tesla had an inverse head and shoulders like structure that was developing, and then it was trying to bounce back up towards the 380s or above. But instead of trying to hold up, we got this big rug pull. So, yes, in the beginning, this was looking quite good. We were trying to push. Tesla was getting ready for a big run. If you look at the chart like this, the inverse head and shoulders was panning out. And we also had support holding at 363. I mentioned as long as we hold that, we're going to be fine. But instead, what happened was as time went on Friday, we got this big rug pull and we ended up losing 363, which is a bearish signal. And now that we're below that, Tesla's going to be at risk of dipping to even lower levels. Looking at the 4-hour time frame, you could quite clearly see that Tesla has a gap to fill around 345. We're going to likely continue to fall to the 350s now because of the fact that we lost that support. And if we can't reclaim it, it's not going to be the best of signs. On SPY, this was trying to pump exactly as you predicted. I was talking about 609 to be tested. We came very close to 609, and then we got this rug pull, and we ended up losing this rising wedge support. So I gave you guys a warning about this as it was happening in real time. And because we were not able to hold the support, we got this break, and this is like a confirmed break to the downside. And the chart looks more bearish now. It looks like we're going to continue to dip a little bit more for the shorter term. So why did the market get this rug pull? It's because Donald Trump has announced that as soon as next week, possibly on Monday or Tuesday, according to reports, he's going to be announcing reciprocal tariffs on many different countries. And that's not the best of news, at least for the short term. Now, this could lead to big changes in our economy and a big shift in the way in which trade is going to continue. But for the short term, there's going to be a big disruption if this ends up being the case. So, what did Donald Trump say? He said that he's going to be announcing that next week reciprocal trade so that we're treated evenly with other countries. That's going to be made. He also mentioned that he doesn't want any more or any less. So that's very important to remember. Donald Trump is also saying that there's big trade deficits between the EU and the US, especially when it comes to like auto imports. And he believes that the trade deficits are just not right, and he wants to do this for fairness and equality. He also believes that this is necessary to help fund many of the different programs he's talking about and to help decrease taxes on the individual taxpayers. That's what Donald Trump's argument has been for the last couple of days. We saw him meet up with Japan's prime minister. They were asked if they would reciprocate against the US if we raised tariffs on them, and they could not answer the question just yet. They have to wait and see. They did that just to be very, very safe. So, with that being said, what's going on? Just know that most of our trade, or almost half of our trade, comes from Mexico, Canada, and China right now. Now, those are the top 3 countries that Trump prioritized during his first set of tariff increases. The Mexican and Canadian ones were going to be increased to 25%, but then, through negotiations, they've been delayed by 1 month. And then the Chinese ones were increased to about 10%. There were some exceptions. Some products were delayed, such as like packages that are under $800. But overall, that's still a very, very big shift in policy. Now, those are the top 3 countries that Trump prioritized. Obviously, they're the 3 biggest trade partners of the US. But then the next big ones are going to be like Germany, Japan, South Korea, Taiwan, Vietnam, the UK, India, and many other European countries. Well, even though these numbers look small when you look at them individually, when you combine them, it becomes pretty big. So, for example, if you take like Germany, which is 5%, Japan's 4%, South Korea's 4%, and the rest of these, just the next 5 of them make up about more than 20% of our trade, which is pretty significant. That is worth, hundreds of billions of dollars worth of trade, almost $500 billion worth of trade, if anything, from just those countries alone. So you can see how it's very important to remember why we're going to be looking at these countries and what Trump could be prioritizing, and why Donald Trump is kind of like thinking this. So please keep that in mind. So we would depend a lot on Mexico when it comes to like trading for food and vegetable oils and factors like that. Not to mention lumber and a lot of other things for like auto manufacturing. For Canada, we depend a lot on them when it comes to crude production, crude oil, petroleum, and also natural gas. And then for China, we depend on them for like manufacturing. We also depend on these other countries when it comes to computers, semiconductors, getting parts together, and many other things. So please keep this in mind. It's going to have a big effect on prices. Donald Trump did say that tariffs may cause a short term disruption. And Elon Musk said the same thing, that the tariff plans could cause short term pain for consumers. So we all agree that there will be a big disruption in our economy. Donald Trump has also made it very clear that in the past he has threatened to impose a flat 10% or 20% universal tariff. That is still being looked upon, but with that being said, it's always a possibility. So what do I see at least from this moving forward? As a reminder, the 25% tariffs on Mexico and Canada have been delayed. They remain at about 10% for most Chinese products. And then the next ones in line could be like India, the European Union countries, Thailand, Vietnam, Taiwan. All these countries could be involved as well. They could be increasing tariffs as well, and Trump's going to make the announcement next week. Then we have Japan and Malaysia. They could also be a part of this. This is going to be contracting our GDP, not the best of news for the short term. The reason for that is because of the fact that this could disrupt trade in a lot of different ways, and it's going to lead to a lot more costs. Higher inflation is going to be coming as a result of this. So, an example would be that it's not just direct, but this could have indirect effects. So, like Italian wines, products from Europe are already becoming more expensive as I speak because there is the fear of tariffs going up and it's affecting supply and demand. On top of this, this will have a direct effect once we start to see the tariffs being imposed. They will be affecting a lot of products from foods to other things like that. It could also affect like housing as we depend on, the top three a lot when it comes to like lumber and factors like that. Other countries could also increase tariffs back on the US. So, an example would be like Canada. Trudeau and Canada have announced that they would also increase tariffs in the US if we did it to them. And the same thing basically is going to be happening. This is going to be affecting businesses, causing some bankruptcies for the short term. So keep that in mind. For higher inflation, when I say the short term, I'm not saying that inflation is going to be high or low for forever. What I basically am saying is that for the next 5, 10, 15, 20 years, inflation will continue to remain elevated, right? We're going to continue to see inflation around 2% or higher, depending on certain periods. Prices will keep on going up for many years to come. But the rate at which they go up changes during certain periods. So, for example, one may argue that, and this is what data suggests, that there's some periods where inflation is closer to 2%, other periods, other years where inflation is at 4%, 7%, crazy numbers like that. We saw that just a few years ago. So in this case, if we get these tariffs for the short term, for the next 6 months or so, we're likely going to see increases in prices, increases in inflation. So the rate at which prices go up will go up as well. And then hopefully things could slow down as time goes on. So the rate at which prices go up will slow down over time. But that's going to cause another surge in inflation. So that's a little bit negative for the economy. Trump's arguments would be that, first off, it's for fairness. He's arguing that there's big trade deficits and this is going to help create a better stance for the US. That's what he's arguing. Secondly, it's going to help bring in a lot more revenue, hundreds of billions of dollars per year. This may be dependent on how much they, plan on raising tariffs back on the US. But yes, the government is going to make more revenue. And if they could reinvest that revenue into the US, it could offset the negative GDP and factors like that. It could also be used as a negotiation tactic. So this, for example, Donald Trump threatened the high tariffs on Mexico and Canada, but then they negotiated and Trump got Mexico and Canada to agree to do more things such as increasing border security, just to, offset a lot of different things. So there's all these different things that are worth mentioning. Just know that for the short term, there's going to be risks of contraction to our economy because of these tariffs. Uh, is it worth it? I can't say that until I truly know how much trade is going on and a lot of factors like that. But that's up to you guys to decide if you think it's worth it or not. But I just want to put the numbers out there so you guys know at least what the factors are. So for the short term, if Donald Trump does truly come out and he says he is, and he starts announcing tariffs on Japan, on South Korea, on all these different countries like India, right? That's going to be more negative, and this could cause a bigger dump in the markets. If SPY does not hold 600, we're looking for a dip to about 595. On the QQQ, same thing. We could also see this dip towards 517 or below if we do see increases in tariffs for these different countries. And for Tesla, unfortunately, this will likely continue to fall off this bearish wedge. So that could cause the share price to dip all the way down towards like 345 or 350 or below. So I would keep that in mind if anything. So keep that in mind. There's a bearish wedge, bearish looking structure on the daily charts. And we have a gap to fill on the daily down to like the 340s. So there's going to be a risk of us dipping there. We need to reclaim 363, otherwise, this will continue to fall. And these tariffs are a little bit more negative. The whole market has a ripple effect on Tesla. So there's a good chance that that could also cause this to drag down. So I just want to give you guys a heads up about that looking at the daily charts. On the weekly, it's not looking too good on the weekly, very bearish looking candlestick. We do have the support to watch for at like 353. And if that doesn't hold us, we're looking for that gap fill all the way down to the 340s. So unfortunately, the weekly looks weak, and there's a good chance that that can also signify more downside is coming, especially once these tariffs are announced. Same thing with SPY. SPY is looking pretty decent on the weekly chart, but there could be a temporary dip back down to our main support at 595 or so. But the overall market's still holding up quite well despite that. Tesla's the one that's a little bit weaker because of lots of negative news when it comes to their sales and factors like that. So unfortunately, the weekly is nearing a bearish cross in the PPO, and the odds favor downside. So I just want to give you guys a heads up about that to just be ready and just know that we're going to likely be approaching our 20 EMA very soon, around 353. So that being said, it is what it is. I was hoping that we would hold 363. If we had held that, this easily could have bounced. But unfortunately, we failed to do that. So there's going to be a risk of even more downside. So I'm here to be very unbiased when I say that. That is what the charts suggest. If you just look at this, we're just making lower highs and lower lows, and we're losing this support here. So it's not a good sign. So be patient, guys. I'm just here to give you guys good insights and to be very unbiased when I do so. Thank you all so much for listening. I'll be back with another one tomorrow, and peace out.